Aotearoa, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. There are plenty of bumps in the economic road of note today. But first up, there was another dairy auction overnight, one that analysts had been nervous about, and the derivatives market soared downside risks for on the uncertainties of how dairy product distortions would fare in the growing tariff disputes. In the end, overall prices were unchanged, so no bump here, which the industry will take as a win. But that is in US dollar terms. In New Zealand dollar terms, it certainly wasn't, with prices down 3.3% overall as the US dollar weakened. Butter inched higher to a new record level, however, and so did cheese. But the whole milk powder price was little changed and skim milk powder fell. China was in there buying, although not with notable enthusiasm. All eyes now turn to Fonterra's interim report on Friday, and the expectations are for only minor tweaks to their payout levels over that which they have already announced at record highs. In the US, the retail impulse tracking through the Red Book Index still shows a strong year-on-year 5.2% gain compared with the same week a year ago, but the advantage is fading and has done so each week in March so far. We don't get week-on-week readings, but for the year-on-year gain to fall from 6.6% 3 weeks ago, there must be a sharpish recent fall away. American housing starts unexpectedly jumped 11.2% in February from January, but that was just making back the 11.5% fall the prior month. The February 2025 build rate was 1.5 million units, whereas the February build rate was 1.546 million units in 2024, so a 2.9% retreat on that basis. It was a similar story for US industrial production, up more in February from January than expected, but the gains were less than year-ago levels. There was another US Treasury 20-year bond auction earlier today, and that brought less support and a median yield of 4.60%. The better supported prior equivalent event a month ago was at a median yield of 4.77%. And Canada reported its CPI inflation rate at 2.6%, which was a notable rise from their January level of 1.9% and an expectation of 2.2%. It is probably only going to get worse from here due to the snarky tariff war the Americans started and the Canadians' collective reactions. Their monetary policy decisions are based on a trimmed mean rate, however, and they only moved up slightly. Across the Atlantic in Germany, and by a two-thirds majority, their parliament has approved a massive €1 trillion funding increase to allow it to build its defence capacity and support Ukraine. It is a massive change in attitude to their fiscal policy direction. In the Pacific, Indonesia's stock market halted trading yesterday for the first time since 2020 after their stock market plunged more than 7% from Monday's close. Substantial concerns over economic stability and consumer sentiment are behind the move. In China, the property sector woes are far from over. Another major developer, Sunac, has issued a major profit warning, actually a major warning about huge losses. Demand for its projects are very weak. In Australia, a superannuation fund has been convicted of greenwashing and it ought to pay a fine of more than $10 million Australian dollars for making false claims about how it invested funds. The US Treasury 10-year yield is now at 4.27% and down 3 basis points from yesterday at this time. And we should probably note that the Tesla share price is down another 6% so far today. And the price of gold will start today at just on $3,036 an ounce and up a net $42 from yesterday, and another all-time high. And oil prices are down 50 US cents from yesterday at just under $67 a barrel in the US, while the international Brent price is just under $70.50 a barrel. And the Kiwi dollar is now at 58.2 US cents and unchanged from yesterday at this time and maintaining its recent gains. Against the Aussie, we're up 20 basis points at 91.4 Australian cents and a new 3-month high. Against the euro, we're unchanged at 53.2 euro cents. That all means our trade-weighted index starts today at just over 67.3 and marginally firmer. And the Bitcoin price starts today at $81,895 and down 1.9% from yesterday at this time. Volatility over the past 24 hours has been moderate at plus or minus 2.1%. You can find links to the articles mentioned today in our show notes. And you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.